Hey everybody, my name is Nicoletti. I'm an attorney here in Florida, and welcome to the Nicoletti Show, where I bring on real estate super investors, rising rock stars, movers and shakers, and leaders of clubs in their communities that educate, entertain, and inspire all things real estate on how you can take your company to the next level. On today's show, I have Gregg Cohen, CEO of JWB, best marketer in Jacksonville of all the real estate development companies, and just an all-around great down-to-earth guy. He is full of knowledge. He's full of information. He's full of experience, right? Because it's all about having experience when you do real estate. And he's been in the game longer than 10 years, started back in the foreclosure era. And on the show, Gregg's really going to dive in to his whole story, how he started, where he was in corporate America, how he stopped the 9 to 5. He read the book on Rich Dad, Poor Dad, and how that really changed him. And then we're going to really dive into how to choose the right real estate market for rental property investing. Gregg has that whole portfolio of property management. JWB does it. I've seen all his videos that he talks about on the either the sponsored ads or the JWB page about how you really have to have the right property management company and really how to get into rental investing and why you should count on home price appreciation if you're a buy and hold investor. These are valuable tips for you, and you're going to learn so much. And I know Gregg's dying to ready to rip it. So Gregg, welcome.
Thanks, Al. Appreciate you, buddy.
Thanks for coming on. And, I know how much you bring to this community. JWB really has come a long way. Even before I got here, I mean, you've been really conquering the market this whole time. And then, I come back into this Jacksonville market, and there's JWB buying this property. They're on the Jack's Daily Record. You guys are really killing it on really helping the Jacksonville community. You're not just investors, you're trying to help a community. And I love to have you on. I think people are going to really benefit from everything you talk about. So Gregg, tell us, what's the whole backstory? Talk to us about your pre-real estate life to your real estate life, where your mindset was back in the day that really changed to get to where you are now, and maybe a little bit about where you're heading and what you could have learned or you wish you would have known when you started.
Absolutely, buddy. I'm excited to be here. Thanks for that incredible introduction. And it's really awesome doing things like this with you and your incredible knowledge base and what you do for all of your listeners. I'm just happy to be a part of it. So, my story is something that, I never expected to be sitting here talking to you, Al, talking about real estate success, 15 years after I started. If you could have seen me in college and if seen me growing up, I grew up in a family that was not an entrepreneurial family. It was a family that was very much about doing good in school, handling your responsibilities, and going and getting a really good job. And so that's what I did in college. I worked really hard. I did an internship with a Fortune 500 company, and I was really proud to get this job. I worked for Johnson & Johnson out of college. And I remember holding so much of my own kind of personal, maybe my corporate value, like my identity was wrapped up in thinking that I had a really good job, and it was a source of pride for me. And I can remember how much that my self-image was wrapped up in it. And I see that now because obviously I've gone a different path. Long story short there, it just didn't work out for me. And I had a pretty crummy time. I think J&J is a wonderful company. I happen to have a pretty crummy time as working with a manager who told me that I just flat out couldn't cut it and that I was stupid, and sent me to remedial classes and told me that I couldn't hang. And as a 23-year-old kid coming out of college, that was really tough for me to wrap my head around. And what I did was I started to look for alternatives. And a friend of mine brought me into this amazing book that changed my life and has changed so many lives out there. It's Rich Dad, Poor Dad. If you haven't read it, you need to read it. And I'll just warn you, it's pretty powerful because I read that book one night. I sat down at like 9 o'clock and I read it through till like 2 o'clock in the morning. And I looked at myself in the mirror and I said, I'm going to quit my job and I'm going to start my own real estate investment company. And
What
There we
about
are.
that book really helped transform you? Like, what in the book was so inspiring that you went from the 9 to the 5, and then you said, "I'm done with J&J. Here I am, real estate." Like, what was that?
It was a couple of things. I mean, it's a quote that I still say often, whether that's with, real estate investments we're making, whether that's with my kids who I have an 8-year-old and a 6-year-old, whether that's with friends and family. This book teaches you to mind your own business. And to many people, that means different things. What that meant to me is that I was just coming from this career in corporate America where I felt like if I was just a good person and I had some ability and I worked really hard, that I was going to be able to retire with the life that I wanted at some point in the future. And I very much had the mentality that that's all I needed to do. And I could just kind of put my head in the sand and then not worry about investments outside of what I was doing. It was just that I just needed to nail that. And there was comfort and security in thinking that way. And what this book opened my eyes to thinking was that that was not the right approach for me, right? That if I followed down that path, the way that the corporate environment and jobs work today is very different than what it was 50 years ago. And that if I only did that, then I was going to have a huge opportunity cost. And I may not get to where I wanted to be in retirement. And so it taught me that I had to mind my own business, which meant if I had a great job that I loved and I wanted to advance my career, that's great. Doesn't mean totally quitting that and starting your own thing. That means doing that job and then looking at what your money is doing for you on the side, right? It could also mean leaving a job that you don't like and starting an entrepreneurial venture, which is what I did. But that concept hit me like a ton of bricks that I could not just put my head in the sand, that I had to mind my own business, that I had to think outside of what my active income was at that moment. And if I did that, it was a real opportunity for me to create the life that I wanted.
Cool. So, when you were starting all of the real estate and you were really diving in, what area did you immediately focus on after reading all the books? I don't know, maybe the Ron Grand clips, or what area was it? Foreclosures at the time, because we were kind of in that area. Was it rental properties? What was that?
You name it, we tried it. And we probably didn't do that great of a job in the beginning. In the beginning, we were a couple of 23-year-old kids. I had one business partner in the beginning. It was my best friend. Alex and I started the company originally. And then six months later, we had our first employee, Adam Regal, who became our next business partner. And so it was the three of us in the very beginning starting this entrepreneurial venture. And then, oh, by the way, Al, it was 2006 and 2007 when we started in real estate. That was about the worst time that you could start an entrepreneurial venture with three 20-somethings who didn't have money, didn't have real estate experience, and then started to acquire a lot of real estate using high interest debt that we were mortgaged to the hilt. That story didn't usually play out for success later on, 15 years later, but that's really what we did in the beginning. We were hustling. We were trying to figure out what we could do. Now, we tried a lot of fix and flip. We had some success. We got punched in the teeth a lot as well.
Right.
And what we also did, though, was we started to build our own rental property portfolio. So from 2006 to 2007, my business partners and I acquired about 40 rental properties. This was at the absolute height of the market. And the reason why I still own those rental properties today and then have added a lot more since then is because we invested for positive cash flow, right? We knew that Jacksonville was a growth market. We knew that appreciation would take care of itself if you invest for the long haul. But what most investors were doing in 2006 and 2007 was speculating. They were buying only on appreciation. And they didn't make sure that the income, the rental income, covered the expenses. And so for us, our saving grace as these 20-somethings, mortgaging the properties, being mortgaged to the hilt, our saving grace was that even covering those mortgage payments, we were able to do that with the rental income. And that made these assets and not liabilities. Because as the market fell from 2007 to 2011, what a lot of people don't realize is that rental income stayed consistent. And so that became what we wanted to be great at. It was building this consistent asset class, which was rental properties. And since then, we now own over 300 rental properties. But the more important thing is that we've built our entire business to help people build a rental property portfolio. And we're able to help clients and 43 different states and 13 countries. They come all over to Jacksonville, and we're able to build this portfolio for them to create this consistency.
Amazing how you just dived into everything, realized what the focus was, and then ended up creating the property management company, which you all have today. How many would you say rental properties would you have in the portfolio that you help manage? And that's something that you can obviously help with other people that are interested in that, because let's be real, some tenants can be a tussle with rent, right? Or during the corona period, when some weren't paying or some weren't doing this or that. Talk to us a little bit about that side of your business, because that seems to be something more and more I'm seeing JWB get into. And even on the Yellowbird page, I'll see people that'll say, hey, I need a good property management company. And then they'll reference JWB and they'll talk about, the commission, the fee, whatever it is. But at the end of the day, you realize it's actually worth it because you all know what you're doing. So talk to us a little bit about that.
Yeah, we have really grown our property management company. I'll share a secret with you. When we started our company to build rental property portfolios for our clients, meaning that they could just buy the rental properties from us, we would make sure that we were producing positive cash flow. We didn't originally want to start a property management company because, just like you said, tenants can be a hassle, right? There aren't too many people out there that say, I want to be the best darn property manager that you can be. And when we first started this entrepreneurial venture, we were the same way, right? We liked putting the investments together. The thought of managing rental properties was the least attractive to us until we tried to outsource the property management. This was way back in the day. This was 2007, 2008, or whenever it was. And we tried to outsource it. And we did our best. We had 40 rental properties, so that's a pretty big number. And you would expect that you'd be able to, find a property manager who's going to treat you like, one of their top clients. And so we did that whole process and just interviewed, and we went with somebody that we thought was the best of the bunch, but it just turned out to be a really painful process. It just turned out to not be something that we could count on long-term resident stays. They didn't sign long-term leases. They didn't really focus on renewing the resident. And so what we ultimately found out was that if we wanted to be great at producing consistency for other clients and we wanted to do it for ourselves, we were going to have to take this in-house, or else our whole business was not going to be nearly as successful. So that was a long time ago. We actually brought property management in-house in 2010. And since then, we've really grown it. We're now up to over 3,600 properties here in Jacksonville that we manage. And it's an interesting business. It is something that is the most important decision for somebody to make, is the property management decision that they're going to make. It's more important than the specific properties you're going to acquire. It's even more important than the overall market that you're going to be in. If you want to be passive, if you want this to be something that you enjoy, managing your rental property has to be the most important decision you make. And finding somebody who thinks the way that you want, who understands what it takes to produce a return on investment, and who has the customer service to back it up, is just really, really hard for people to do. So that's what we want to be great at.
And it's really interesting because when people first start out in real estate investing, their end goal already, just like not even having bought a property yet or under contract with the seller, their end goal is, I want to build a portfolio. I want to get rental properties. I want to do the BRRRR method. I want to do all of this, but they don't really see what really goes into that. And then they get there, and that's when the wheels start falling off. And that's why, and I'll say this for everybody out there, it's super important. You go to Gregg and you go to JWB if you have a rental property portfolio that you really need help with, whether it's managing the tenants, short-term, long-term. They're always there to help. I've seen so many people comment on the investor Facebook groups all the time about JWB and what they do. So, Gregg, with people that want to invest in real estate, rental property investing, how, because you do it so much and because you understand cash flow, and for everybody watching, Gregg does all these cool seminars once in a while. I'm scrolling through Facebook and all of a sudden he's got like the Excel spreadsheet there and he's talking about numbers and cash flow. Sometimes I'm like, I've never even seen that stuff. I don't know what it is, but I know he's really explaining it for people that get it, right? So how do people choose the right markets for rental property? How do they know?
Yeah, absolutely. I mean, it's a really important decision, right? There's the property manager is the most important decision. Start there, right? Build those relationships with somebody who you feel can manage your money well, not just rent your properties. They almost need to be somebody that you think of almost like a financial advisor or a CPA. So let's say that you knock that out of the park though, right? You find somebody who's up to that standard. Well, then we need to start evaluating the market that you're investing in. And, as I was talking about in 2006 and 2007, the saving grace for why I didn't have to send those properties to foreclosure where everybody else did is because the assets paid for themselves every single month. And what most people don't realize is that there's pretty simple and readily available information that can help you understand if your market is going to be something that can produce that for you, because there's only a small handful of markets across the country that's going to work in. So what you want to do is you want to look at median home sales prices and median rents. And you want to look at your market and you want to look at what the market or what the overall US median is. And quite simply, if you're going to produce positive cash flow, which means that more rental income is coming in than the expenses, you need to be in a market that has low prices and high rents. And so you can figure out exactly what the US median home prices are. If you need some help on that, of course, I can send you that information. You can put a comment here. I'll make sure that I get that information to you. And then you can get your local knowledge and you can figure out if you're a real estate agent, you have access to the multiple listing service. You can see what your median home sales price is, and you can see what your gross rents are. Gross rents come from the US Census. And so for Jacksonville, for instance, Jacksonville is obviously the market that I invest in. It's the market that I know and love, and that's where we put all of our clients. But it's not just because I live here. It's because if you look at the median home sales prices for Jacksonville, they're 9% below the national median. And if you look for gross rents in Jacksonville, they're 1% above the gross median in the United States. And so when you have low prices and high rents, that allows you to get into a cash flow neighborhood that you want to be in. As a little disclaimer here, some folks will say, well, surely I can find a property that, in some other market that might not hit these metrics that cash flows. And I'll tell you, yeah, you definitely can, but you're not going to find a good property manager who wants to manage your properties there. This is about finding that type of a metric, not in low income housing, because low income housing brings a whole set of other challenges that does not fit the bill for a passive income rental property portfolio, and doesn't fit the bill for long-term success.
I think a lot of people ask about that, even at like the Jax RIA events, like Section 8 housing, low income housing. People talk about that on some of the podcasts. Like, is that a niche to get into? And it's interesting to see your perspective on one and the other. Sure, people may do it because it benefits them. Maybe they have something that works. But overall, somebody like Gregg has seen it for 15 years. He knows what's going to work. I mean, I like how you were explaining that low prices, but high cash flow for the rental income. Let me ask you this. So when figuring out markets, like focus on Florida, just let's say, what are your thoughts on like the smaller counties versus the Jacksonville, the Orlando, the bigger metropolitans? What's the focus on things in like Clay, Nassau, St. John's?
Well, there's a couple of basic kind of rules that I follow when it comes to choosing a market to invest in. Again, you want to build a portfolio in a place that you're mitigating risk of things dramatically changing, maybe due to a big company leaving and a lot of that job base leaving, right? Because at the end of the day, if you want to be successful for a rental property investment, you got to make sure that you have residents there that can afford to pay the rent and that are going to be there and that the jobs are there to support them. So one of the rules that we ascribe to is to make sure that the market that you're investing in has to have at least 1 million people there.
Wow, what a criteria. Yeah.
Yeah, it's pretty easy to follow that one, right?
Yeah.
I mean, if you are investing in an area that has at least 1 million people for a population, other companies are there to support that. Many times you have Fortune 500 companies that are anchoring the job base there. Like, for example, in Jacksonville, we have 3 Fortune 500 companies. our largest employer is the military, and we have a huge financial, logistics, healthcare system, right? That mitigates risk to this overall model, because if one company leaves, there's another company coming in right next door, right? If something negative happens to one company can't bring down or have a dramatic effect on the overall economy here in Jacksonville. So when you ask about some of these smaller counties, I would really caution folks, because if you are going into some of those smaller counties that don't have at least 1 million people there, you're putting a lot of your eggs most likely in 1, 2, or 3 employers, or maybe one industry. And as we all know, things can change for that one industry. And if that changes and you put all of your eggs in that one basket, your model of your rental property portfolio might really suffer.
It's just amazing to see how some things in real estate are not worth going into that market, but then you'll have other niche markets, maybe probate or quiet title stuff that actually is good for those markets. But I like how you've set a criteria, you've set a bar for what works and what doesn't for rental properties. So talk to us, Greg, about home price appreciation. Of course, when you buy real estate, you don't just want to buy a house that's only going to go up like a little bit. You want something that's going to stay steady. I don't know what that percentage is. Maybe it's 6%. I think of it like stocks, right? Like it goes yield 6%. Talk to us about why you should count on home price appreciation when you're doing buy and hold investing. What does that mean?
Well, and it's interesting because as long as I've been investing now, I was investing in 2006, which was prior to the crash. The common knowledge was that you always bet on future home price appreciation then. I mean, people were saying things like, it's impossible for home values to go down in 2006, right? The thought of not counting on home price appreciation was foreign. Nobody would ever do it in 2006. And then as a country, we had a day of reckoning. We realized that real estate and the lending practices and a few other things really caused the downturn in 2007. And from 2007 to 2011, values dropped over 35% in Jacksonville. And that's very, very similar to what happened to the entire country at that time. And guess what people thought about home price appreciation after 2011, Al? Did anybody count on that going forward?
I don't think so.
No. So now we're about 10 years out of the bottom here. And people sometimes miss the mark on how to think about home price appreciation. It's a very nuanced argument. So I'm going to tell you when you should be counting on it and when you shouldn't. But the big point here is that if you're an investor and you look at your overall rate of return after a 10 or a 20-year hold, you can look at your different profit centers. There's positive cash flow, like we've talked about, right? There's tax savings, there's principal pay down, there's home price appreciation, and it's a hedge against inflation, which is really good if you have debt on the property. So those are your 5 profit centers. Well, if you look at what the most impactful profit center is after a 10 or a 20-year hold, it's home price appreciation. And it's not even close, especially if you take out financing, which the vast majority of rental property investors do. So like I'm talking about like out of maybe a over 20% return, maybe 15% of that is home price appreciation, right? The other profit centers make a very small component of it. And so most investors post the Great Recession, the real estate crash, say, you know what? I'm only going to focus on cash flow because I'm not going to bet on appreciation at all. And what they end up doing is having these cash flow blinders on. And it really hurts them because they're making decisions to hold on to these assets for 10 years or 20 years. Sometimes they're buying 5 or 10 or 20 rental properties, and they're not making the most informed decisions, and they're missing the biggest profit center. So there is a real time when you should be counting on home price appreciation. And I'm also going to share with you the time that you shouldn't, because it's not always something that you should factor into your decision. So which do we want to hear? The time you should or your time you shouldn't?
This is all so valuable, Greg, because for someone like me, I don't do any real estate investing. And I hear, it's almost like a steak, right? You take all the terms in, it absorbs, and eventually you come out with what, great product. It's amazing hearing you talk about all of these different nuances with buy and hold rental investing, because someone like me and other people that are watching out there have absolutely no clue what any of that is. And when you have an expert like Gregg that you can talk to about this and talk to about cash flow, and who knows, maybe partnering up with JWB on these things. I don't know if they do that, but Gregg's a wealth of knowledge, a wealth of information on all of that stuff. So, you brought up the recession. We brought up some of the things that have happened in '08. Talk to us about pre-COVID and COVID right now. How is the business of JWB looking right at January, February, and what happened and how did the company change mindset, core values once that coronavirus period hit?
Well, and a lot of this actually goes right into the dovetailing the conversation we had about home price appreciation as well. Because when COVID hit, everybody was scared, right? As an entire world, we had never dealt with this in the modern era, right? It'd been 100 years, right? So nobody really had bearings for how this was going to work. But what we had always known about real estate investing in rental properties is that people came from the stock market to rental property investing to find consistency in the cash flows. And then also, if you take it over a long period of time, you actually have consistency in the home price appreciation as well. Many people don't realize this. So when COVID hit and everybody was really on edge, what happened to the stock market, right? It went down 30%, right?
Circuit breakers hit. Yeah.
Right. Now, when you look at what actually happened in rental properties, you didn't see nearly the volatility. So we've tracked our rent collection every month since COVID broke, and we've had over 97% rent collection for our rental properties. And when rents are collected at 97% plus, that means to you as an investor, that means consistency. That means this is a haven for consistency in a world, especially during coronavirus time, that was highly volatile, right? It wasn't just the stock market that was highly volatile, right? It was oil, right? I mean, oil was all over the place. I mean, it was tough to find consistency. But if you talk to the operators, the single family rental property operators, they all did. I won't say they all did, but the ones that I speak with, we're not the only ones who performed at a really high level, right? This asset class overall performed at a really high level. And so what that allowed us to do is to speak calmly with investors. And, when COVID broke, everybody was a little rattled. We get that. But as soon as the dust settled, people said, well, if I can think about the best risk-adjusted returns for my money, do I want to put it in the stock market where I clearly see the ups and downs and the huge volatility? Or do I want to put it in rental properties? And a lot of people have made the decision to put it in rental properties specifically because of how it performs, even when you have unusual things that happen like COVID.
So really, COVID didn't really disrupt the rental industry for you at all. 97% is low risk. So if you're working with JWB, you know that they're pandemic proof. They're going to be there during recession proof, and they're going to be there to help you along the way because they're going to help maintain that cash flow and the rental income off your property. So, Gregg, a lot of COVID seemed to be multi-level. So there was the real estate business itself that you had to manage. How did you and Alex as a team sit down and say, we have a different animal here? We really need to get the team focused because a lot of it is real estate, but then a lot of it is team effort, getting everybody on board. Everyone's got a different role, energizing everybody, inspiring that amazing group that you have there. Talk to us a little bit about that.
Well, when COVID broke, my business partners and I called an emergency meeting when we fully understood the depth of where we were, or at least began to understand the depths of where we were. We called an emergency meeting and we went in and we totally opened up the business plan that we had built a few months before that was going to govern 2020. And we threw it out and we said, let's start over. And we went incredibly conservative. One of the first things that we did is we realized that everything starts with taking care of our team. If we take care of our team, then our team is going to take care of our residents, take care of our clients, take care of our vendors, and then everything will work. And so we first sat down and said, what do we need to do to take care of our team? Now, the really cool thing is that JWB's been in business. This is our 15th year. And we have had ups and we have had downs. As you can imagine, starting to invest in 2006 and 2007 and taking on all of that risk didn't always work out for us. We had some lean years there. The rental properties worked. Everything else, not so much. So we took some big losses. And so we understood how that has felt. And of course, we navigated that situation and then recovered and thrived and all that good stuff. I mean, but that still mattered to us. We remember what that felt like to lose a lot of money on a series of real estate projects. And we remember how important cash flow is and was. And so then now, as JWB has done really well over the years, we have made sure to plan for a rainy day. We didn't know when that rainy day would be, but it became COVID. And we had looked at the resources that we have stocked away, whether that is reserves for us, whether that is paid off properties for us, whether that is access to lines of credit. We looked at what our liquid capital was when COVID broke. And luckily, because we were disciplined over many, many years now of really solid success and saving away for a rainy day, I think that is the single greatest reason why we were able to go immediately that next day to our team, hold a team meeting while everybody was concerned about losing their job in any industry that you are in. And we had a real honest, genuine discussion with our team. And we said, nobody's losing their job.
Amazing.
And that was the start of taking care of clients, taking care of residents. It was the start of doing that. So I'd like to think that it was many years in the making of disciplined approach that allowed us to do that. And I think that really separated us from other businesses who weren't able to deliver that message, because when you can deliver that message, you calm fears. And when you calm the fears, people get back to doing exactly what they're doing. And quite frankly, we had to overcome a lot of obstacles for COVID, right? We had to go completely remote. We're a company culture that is 80 people in our office. Like, we thrive off of the camaraderie of being there. So we had to learn how to operate a little bit differently. But when you calm the fears, our team is full of talented people who overcome obstacles like that every day. And so we did, and we were able to really perform for clients and for residents.
So how did that change culture-wise? Because you brought up a great point. Everybody was in that office every day, January, February, half of March, and then all of a sudden it's everybody's remote, go home. So what steps in leadership, values, what did you take to make sure everybody stuck together? Did you have like meetings every day? Was it like a 2-hour meeting once a week? Like, how did you make sure you kept the team there? Was it just consistency? Because it's amazing hearing how you, Alex, all of you really thought ahead of time for this rainy day. This whole time in JWB preparing for this moment, and then having you and Alex step up to the plate to really lead. Talk to us about that culture shift of employees out of the office.
Well, I don't want to make it seem like it's been easy to do. I mean, we usually operate within a game plan. We feel like we have either been through it before, or we have a network of folks that we can really lean on, and professionals and consultants to help us navigate some of the nuanced things that you need to do to continue to invest in a culture. I mean, this is one that nobody had a game plan for. And it brought a lot of challenges. I mean, the biggest challenge for us was just being next to each other. Like, that we always felt has been a big source of our culture. And our culture is one of the reasons why people choose to do business with us. So, I won't tell you that it has been easy. Just speaking truthfully, it's been about 6 months that we went remote, that we didn't get to see our people. We did as much as we could with our meetings, and we try to keep as much normalcy as we could. We have a team meeting every Tuesday that typically is like the source of our inspiration for the week. We love our team meeting. It's an incredible, it's an incredible meeting, but it's just not the same when it's done virtually, right? So we kept elements of it, but we cut some stuff that just wasn't going to work in a virtual environment. Daily meetings and meetings with, we have one-to-one meetings with the people who directly report to us. all of that stuff stayed the same. It just became virtually done. And as I look back now, we're super excited that we're all back in the office. I mean, we started to go back October 1st. So it's been about 3 weeks now that we're back in the office. And immediately it's been a huge difference, right? It's that now we're all social distance and wearing masks, and that's a little weird still, but that being in the same room with people has been really, really fun to experience. But I'll tell you, it has been difficult. I mean, the last 6 months, our culture has not been the same as it was pre-COVID. And what we have, I mean, I think that's just real. And so I think it's real for every company out there. And so one of the things that we have noticed, especially on our business planning that we do, we just got out of business planning last week. We said, we need to make sure that we prioritize rebuilding this culture, just like we were building the culture back in 2006 and 7 and 8, right? We need to make sure that this culture gets that extra love and attention, that extra investment right now when we get back from COVID, because it can be rebuilt. And, I mean, we have people on our team that I've never met. I mean, that's never happened before. We have people on our team that have been working here for 3 months or 6 months that I've never had a one-on-one conversation with and met in person, so it's just real that it's a little bit different during COVID, but we're really excited about the opportunity to rebuild.
So sustainability, culture, community. We have to dive into this. There were multiple articles that came out in the Jack's Daily Record about JWB finally moving in the crates for the sustainable housing, which look amazing, by the way. I saw the way that they got the fence up so you can't really see in. Looks amazing. Also buying the Federal Bank, the old Federal Bank building, and then some of the other things in downtown. Gregg, you have been a major proponent during COVID, and Alex, being that spokesman for the Jack's Daily Record, getting on the articles about revitalizing Jacksonville. There are not many developers, investors that are thinking just that outside the box. That is a brilliant strategy to the community because they recognize JWB credibility, trust, people that are good to the community. And, we love that. We love having people like that. So talk to us a little bit about that. Like, what are you all doing? Where's it going? What is going on? Like, spill the beans and let everybody know what's happening.
It's funny. You put these plans in place and you put these properties under contract and you work on them. I mean, we have had those plans in place or those properties under contract and been working through it for probably about 1.5 years. And you know how they talk about like trying to time like a marketing blitz, like you want everything to work, bing, bang, boom. Like we could not have planned a better marketing blitz because basically like all 4 of our projects hit the exact same day as either as we, officially purchased the properties or we had some great thing in the city, like a building permit or something. It was like boom, boom, boom. It was the best marketing campaign we've ever launched. And it had nothing to do with any sort of planning. That we couldn't have planned it all to happen that way, but it's just been really fun. I mean, this has been something that we have been very passionate about as a company for a long time. It first starts with just wanting to do something great for Jacksonville. Most people need to realize that for a company like JWB to be taking on these projects with where the state of our downtown is, which means that the rents downtown don't support the purchase prices and don't support the renovation costs for the projects we're doing. You have to work with a developer who has to see beyond the initial return on investment because quite frankly, we could use our company resources to make a better return day one, pretty much anywhere else than what we're doing.
Right.
So you have to work with a developer who wants to do good for Jacksonville, who wants to be a part of this positive change and who has a long-term outlook. Now, of course, we believe that long-term, this is going to be a very strong financial project for JWB, but I mean, we're talking 5 years, 10 years, 20 years, maybe. I mean, we're taking a big risk. So you have to work with a developer who really believes in what you're doing. And the reason we believe is because we look at where Jacksonville should be long-term. We see that in order to develop the kind of talent that we want, to raise incomes, to bring better jobs, to bring better employers here, we need to have a talent pool that is really strong here. And so in order to attract that type of a talent pool, a thriving and urban and walkable downtown is what that talent pool wants. And so we saw this many years ago and we said, let's put our stamp on this. And so there's actually 4 projects downtown that we have purchased all within the last year. It's clustered around basically a 1 to 2 city block radius there. It's right next to City Hall downtown. And we're going to do some amazing things on this little part of downtown that really there's nothing that has been done to that level in this cluster of kind of real estate activity, incorporating both retail and mixed use, meaning residential apartments that are going to be there. It's going to totally change what you would expect for downtown to be. And it was funny. I was talking to my wife the other day. It was probably like, I don't know, maybe a week ago as we were just getting out of business planning. And it kind of struck me because I had never really told her about some of the projects that we do. I mean, we talk about it, but she's been hearing this for 15 years. There's only so many times you can get excited about building a new construction home and renting it out, right? But I was like, baby, I was like, this is probably the first time once we build out this cluster of activity and we have this open courtyard around 2 buildings that has apartments and retail and all this good stuff. I said, you're going to be sitting down in this open courtyard. You're going to be ordering a drink and having dinner, and you're going to look up and you're going to be really proud of what you see. And she's always been proud about the success of the business, but she's never really been proud to look at a rental house, right? It just doesn't do it for her.
Right.
So I'm super proud that this is going to be something that we put our stamp on Jacksonville. It's something that we can bring to the community. I think it's going to have amazing lasting effects for downtown, and it's going to be a catalyst for others to do the same.
I can see it just lights you up. Like I can see that driving you, the passion. You're so excited about it, which you want to be. And if this is a passion, you're really looking forward to this for 5-10 years about how you can change Jacksonville's community. It's funny. I'm originally from Miami. Down in Miami, they have so many different areas, different sections. There's a place down there, Wynwood. Back in 2005, Wynwood was just a warehouse district. There was nothing there. It was probably car shops. It was probably little retail shops. Number one, nobody walked in there. Number two, you stayed away from that. And you don't want to go in that area. All of a sudden, these real estate developers come in sometime in like 2011 and just revitalize that area, which now becomes like this new age mecca of art. I mean, it's amazing what it's done. And so now, because of that, over the course of 7 years, it expanded to breweries, open art areas. So I can relate to what you're trying to bring. You want to bring that environment that is welcoming to Jacksonville. While it's not quite there just yet, you are moving to that area so people can be proud of being in those kinds of areas, which is amazing, Greg. I mean, I'm really looking forward to it. I know you are.
We're going to share a beer together down there, but we're in the courtyard. All right, buddy.
There we go. All right. I'll take you up on that. So Greg, I get recently, because we haven't been in any of the investor groups in person, right? For a while, Yellowbird was having it monthly. Jax Ria is doing their thing. REIF's doing their thing. And for a while, we were all every month meeting, and now we're not. And now we're doing things online, maybe groups on Remo. Yellowbird's got a great thing for that. And new people are constantly coming into the market. It's amazing. I saw an article that, people from New York, New Jersey, just like 1,000 people moving every day. When people are moving here, they want to know more people like you, Greg. Talk to us about really being in the benefit of that real estate community. Like, what has this meant, not just real estate wise, not just team wise, but on the networking end? Because you need a network, you need amazing connections to make it happen, because there's always going to be somebody that doesn't do what you do, that you need their help, and collaboration, right? Collaboration is very key for your business. So how has that real estate community changed, and what benefit has it been to you and JWB?
It's been an incredible benefit. If you looked for my social presence maybe 2-3 years ago, you weren't going to find much. And I remember going to a conference about 2 years ago. And I was working with our marketing coordinator, Kate, and she was at the conference with me. And we were watching somebody talk about how they were saying it's so important for you to have a platform. And, a platform's not just going to create itself. You have to get out there and you have to create your own platform, right? Whether that is the podcast or the show or whatever it is for you, Al, this is an incredible platform that you've created, right? And then they just talked about it and they said, if you can consistently create this platform and then you just simply show up and you're just yourself, you are going to attract so many people, whether that's clients or vendors or key relationships, just like we have with you, Al, right? That it's just going to happen. It's not that hard of an equation. The secret is stepping outside your comfort zone, creating that platform, and then simply showing up and being yourself. So, from that moment, I remember speaking with Kate and I said, you know what, they're right. I need to do this. And for a while it was tough for me because I'm more of a reserved person. I'm not your extrovert. I'm not the person who's out there always screaming from, the hilltops of what my thoughts are, but I just started to just internalize how simple it could be. And I also started to internalize that I felt like I could really help people within my niche, that I'm very confident that I can help people. And from those 2 years, our network has really grown, and not so much in numbers, but just quality, right? The engagement that we have, whether that's our group or our show that we put on, the quality of relationships, just like you, Al. I mean, we were blessed to have you on our show not too long ago.
Love being on there.
What an honor it was to have that, right? And then, so that really has been dynamic for my business. And if others are thinking about potentially doing the same, I would highly encourage it. It really is something that now the barriers to entry to doing it are so low. You can have something that's really well done and on a very limited budget. So it really, I think, comes down to, it took me kind of getting over myself and over the hump of actually putting myself out there. That was probably the biggest change. But it's been incredible.
Stepping outside of your comfort zone is a theme that was something I learned being down in Miami, first working at the firm and, going to the networking, holding the mic, pass the mic, and not just saying, hello, I'm Al Nicoletti, I do this, but, making yourself different. And you really have to bring that presence. And it is a different world when you start marketing and networking with people that you don't know, that have been here for 40 years or 15 years. And you think, how do I get in? You just really got to step in, make it happen, take action. And even the new people that are coming, the new people that were on the Yellowbird Remo, this gives them a platform. And you also have the JWB Facebook page, which has valuable content information on there. So when you're first coming in and watching this, because it'll be on every platform, I'm going to be sharing it everywhere, Greg. When you watch this, you're going to want to join that group because he provides all that rental property income, all the buy and hold, all the segments, and really important stuff. So what's interesting about the community, Greg, is we have all these Facebook pages, right? We have tons of investors that join, tons always asking questions. Sometimes the same ones. Who are the GCs to use? Who are the best title companies? Who's the best property management? And it's funny, when I was on the show with you and Pablo, loved being there with you and him. That show, the Not Your Average Investor Show, if you haven't watched it, you really need to tune in. Amazing content. Pablo is just, he is such a light to that show. And then Greg with all the wealth of information. You get a lot of investors that post comments, and one of them ends up being, should I do an LLC for my property? Should I do a land trust for my property? And then you get everybody going, oh yeah, you should do this. You should do this. And it's funny because I don't do what you do. So I don't, know the true benefit of seeing those things. I've had investors say, oh, I love land trust. I go to this title company. We do this. This is what they do. And then you have other people that'll say, we like, we love LLCs and all of that stuff. So,
love COVID, huh?
Yeah, there you go. So, on the show, we brought up LLCs and land trust. And I didn't prompt it. Pablo didn't prompt it. And it was funny how you talked about land trust, how it was one of the first strategies JWB was doing. Talk to us a little bit about that, because that strategy really shifted.
Yeah, and it probably surprised people with my answer, right?
Yes.
It surprised you too. Yeah,
Yes.
I think when it comes to a lot of maybe legal or really a lot of advice when it comes to the legal part specifically when it comes to real estate is there's a way that it can be done, but there's not so much factoring in of the hassle that goes along with it. And you balance really what the best thing to do is to protect your assets with the hassle with what your return is going to be. And that's a different equation for everybody. So we were talking about land trust, and somebody asked me if I've used land trust in the past, and I had. Land trust for me, and Al, feel free to tell me what I'm missing here if it's significant to this. But land trust for me is a way to build anonymity, mainly within my rental property investments, to keep my name off the public record, which is true. So when we first started to buy rental properties, that's what we did. We put them into land trust until I realized that insurance companies, financing, banks, and everything don't really understand land trusts. And so we would put them into land trust, and invariably somebody wouldn't understand. They wouldn't want to insure the property, would limit my choices of who I could get the insurance through. So then I might have to go with another carrier who understood it, but maybe they were $200 or more in insurance each year, right? Or maybe I couldn't get financing in the land trust. And so in order to overcome that, I'd actually have to deed that out of the land trust to put it into my personal name to get the financing, which costs money. And then I might have to deed it back into the land trust, which costs money again. And then there's the hassle of all of this. Again, it was 40 properties at one time. Now it's over 300 that we own. And so you can imagine like this amount of hassle for when it came to land trust, not a whole lot of benefit. Anonymity is not the biggest and most important thing for me, right? For example, LLCs, you can get anonymity and real asset protection. And so what we decided to do with our own assets, I fully understood that I knew that my name would be on the public record, and we still decided to keep them in our personal name for a period of time. And we just made sure that we got great insurance, to make sure that we overcame a lot of the risk mitigation, but it just simply wasn't worth the hassle on the land trust side. So it's not a one size fits all answer. Some may not be as complicated as we are, and land trust may work. But I think you really got to kind of balance all three of those components. What is possible from an asset protection perspective, the hassle, and then what your real return on is, factoring in some of the costs that'll come along with it.
Yeah. And I loved how you explained it in the show about that. It just created this web of just so many things, and how you all went back to the table and said, this is a mess right now, and it's not working, and we're going to cause so many issues. We need to just can this right now. And maybe for some properties we'll do it, but for business structure, for JWB on the mass volume that you're doing, it's different for some investors, right? Some buy one property and then they say, Al, we want to do this land trust. We want to put it in there. How much is it? 25,000. I mean, it depends on what you're trying to do, but a lot of the purpose of land trust back in the 90s and the 80s was for like the $1 million property, the $2 million, and how the statute says, oh, you can maintain the homestead and, you still maintain the certain benefits, but it provides that anonymity. And I agree with you. The LLCs, they provide the tax benefits, the write-offs, and they provide the creditor protection, because you want to make sure that you have two or more members on it, not just one, because if you have one, it creates that shell corporation company. And so people like Gregg understand that, and JWB knows all about that stuff. So yeah, I love that story when you told me, and it had me thinking even after the show. I was like, wow, that's great for people to learn. People don't know that, Gregg, land trust.
I get my information from people like Al. So go to Al if you have any questions. He's going to point you in the right direction and help you out.
Very cool. So, biggest deal killers in your business. What are some of the biggest deal killers JWB has come across? I don't know. Maybe you have a story to something. What
Yeah,
is it? Title? Is it money? Is it lending? Is it private capital? Like, what is that biggest deal killer?
Well, when you said the biggest kind of deal killer, I immediately thought about the worst deal that we've done in a whole long time. And I'm happy to share that story. I feel like when you go through a really big money losing venture, it's always nice to just share it. It somehow makes you feel less bad about it, right? And again, in rental property investing, you can work with a company like JWB, and there's a few others out there, and they're going to take a lot of the risk as far as actually investing in real estate off the plate for you. They're going to basically produce an asset for you that's already been built, or it's already been renovated, it's already been rented. They're going to allow you to buy that, and they're going to do the management for you, and it's just going to be this recurring revenue for you. But there's a whole lot of risk that an active investor, that an investor like JWB is going to take on that you'll never see. It's one of the reasons why turnkey investing, or what we're talking about with JWB, is so popular. It's because the risk stays on JWB, not you as the active investor. But JWB isn't perfect. Sometimes we make mistakes, and clients would never feel it because the risk is on us and we eat it.
Right.
But it's important because if you're an active investor, this is the risk that you're stepping into. So we had a property that we purchased at a foreclosure auction. This was a little while back when properties were actually going to foreclosure.
Right.
And we bought the property, and I don't exactly know the specifics of why it was missed on the title search, but there was an extra lien on the property to the tune of about $100,000 that we purchased the property for. And so, well, actually, we bought the property for $100,000. There was an additional lien of 100 or something on top of that. And we didn't know that it was there. It was missed by somebody within JWB or somebody in our network. Whoever hands, I don't know who it was, but I know it was painful because JWB was stuck holding the bag on it. So we paid $100,000 at auction. We now have an asset that is not worth nearly what we thought. It's an extra $100,000 in the hole. When you look at that, your choices are you could spend a whole lot of time, money, energy, resources renovating that property to only lose maybe $80,000 on the project, or you can just call it a loss and literally spend $100,000 on buying a property at foreclosure auction that you have to immediately give back.
Wow.
And that's what we did. We did. The second person, the lien holder, had the right to the property because they had the lien, and we talked about it with them, and there was no budging. They were not going to show any mercy to us, and we literally took $100,000 loss because of a title issue. Because this is what you step into when you're buying real estate and you try to find undervalued properties. You're going to hit a lot. We've bought over 3,000 properties in our lifetime. Sometimes you take big losses. So that was the biggest loss that I can remember, and definitely the most recent one. And that one was not fun, but that's real.
So really, it was a combination of the lack of proper research, maybe you would say. Foreclosures are a lot like quiet titles. Banks are supposed to include any and all people that may have an interest in it. Did the lender forget to include that lien, or was it just something that no matter if the lender did include it in the foreclosure, it was still going to stick, and it was more of a we should have run a title search or a title commitment beforehand? Because I talk about that a lot, right? Like any probates, any quiet titles, partitions, anything like that, I always want to see a title commitment upfront. I want to know the equity. I want to know the breakdown of the seller's net proceeds. I want to know the HUD, everything. So was it a combination of the lender or the title or the research?
It was the research. It was the title. So we always run a title search before we purchase a property, and the title search was run, but didn't show up, and it would have required additional research on it. And we were left holding the bag on that one. So within our control, or within our extended network's control for that one. So yeah, that's real.
That's tough because title ends up being a very common answer to that question. Is it's not getting the motivated seller. It's not locking the deal up. It's not, hey, everybody, we agree to a contract. A lot of investors, realtors, forget about the concept of title and how anything on there can make or break the deal. So always do your due diligence before any type of deal, and work with the right title people. Gregg knows who they are. JWB, they work with the best. So make sure that you always do your due diligence. Gregg, tell us, in terms of your business and people watching this, who are you looking for to connect with JWB? So when they watch this, they go, this is something I can work with JWB on. This is something I want to message Gregg on. Who are you looking for, to keep growing the community, to keep growing the business, real estate, community, culture, name it? What is that?
Yeah, thank you for offering me the opportunity to share that. I mean, really, we best serve those individuals who want to invest in real estate but think it's too hard, or think you live in the wrong market, or you don't have experience, or you don't have time. If you've wanted to invest in real estate but it's been too hard, or some of these obstacles have been in your way, we might really make a great fit. That's why most of our clients actually live outside of Jacksonville, and then they choose to invest with us. We manage the real estate portfolios here in Jacksonville. So folks who are just not happy with the stock market and have kind of wanted to be in real estate for a long time, haven't had the opportunity to do it just yet, that would be a great opportunity for us to connect. And then those who, even locally, I appreciate you mentioned some of the good things on the Yellowbird group and other groups. We love serving clients that already have properties, but they're just not being managed to their expectations. And so we can do the management for those properties as well. And so either one of those would be great folks to connect with us. And, obviously looking forward to serving you.
Yeah, there's tons of those out there, right? They're always reviewing the Facebook pages. They're all over there. And there's just so much content. It's endless. Real estate is endless with opportunities. There's so much to talk about. Gregg, on a real estate end, wrapping the show up, what is one of the biggest real estate myths, either jumping in or being here now, aside from the rental property market? But like, what is that myth that people keep hearing about that that they really shouldn't focus on, that you have the experience to talk about?
Well, I just think, it's such a shame that there's so many people out there that want to invest in real estate that don't do it. Right. I was pulling some stats here, and this was from a Gallup poll, and they asked people, what do they think the best asset is to invest in for the long haul? And the number one answer was real estate. It beat every other asset class. It beat stocks, bonds, whatever, CDs, gold, oil. It beat every single asset class. So this was the entire country they asked, and the Gallup poll said that it was the number one answer. They then asked those same people, what assets do you have in your own portfolio? And real estate was not the number one answer. It wasn't the number two answer. It wasn't the number three answer. It wasn't the number four answer. It was the fifth most popular answer. It was, I think it was so low. I mean, only 5% of people thought that bonds were the best asset class to invest in, but 50% of people had bonds in their portfolio, and only 30% had real estate in their portfolio. So it's just out of line, right? And I think one of the biggest myths is that investing in real estate has to be hard. It doesn't have to be hard. You have to work with a partner that can make it easy, but it can absolutely be done. And I really want for everybody, for their actions with their own financial portfolios, to line up with their own beliefs. So if you are somebody who has believed that real estate should be in your portfolio, look for a partnership with a company like JWB or a number of other reputable ones out there that can make real estate a part of your portfolio. Because, I think when you build a portfolio on multiple asset classes that are all performing well, that helps you sleep well at night. That helps, your kids have a better education, right? That helps remove stress from marriages, right? These are the things that are possible. And I think real estate can have a part in everybody's financial portfolio.
If you invest correctly and you save properly and you have a system that works for you, I've seen so many people that'll copy what somebody else does, doesn't mean it'll work for you. And finding your own style in real estate is important, because not everybody's going to like rental properties. Not everybody's going to like the west side or the north side. They may want to go Ponte Vedra. They may want to go north side. So finding your rhythm is super important, because you want to enjoy what you're doing, right? That finding your passion for what you do is amazing. Quick question for you, Gregg. What are your thoughts on REITs?
REITs, REITs overall, I don't really get. I mean, it's a better way to invest in the stock market, but when I look at the opportunities to invest in REITs, and I look at the opportunities to invest in actually owning the assets, or there are other opportunities to invest in syndicated funds and things of that nature, I think that the thing that you don't get with REITs is you don't actually own the asset. So I'm a big believer in actually owning hard physical assets. You can do that by building your own rental property portfolio. You can do that by investing in other syndications like I've spoken about. But REITs make people feel better for investing in the stock market, that make them feel like they're investing in real estate. And it's just not the same in my opinion. I'm biased, but that's how I feel. Yeah. I don't own any REITs.
There's so many markets, right? The commercial market, the public storage markets, even the retirement markets. I mean, that's also blowing up in Florida with the aging population. I mean, I've seen some of them here and there. It's interesting hearing you talk about getting the actual tangible asset versus having a collection or portfolio of just a stock, even though sometimes they have really good dividends too. I mean, it depends,
Exactly. I mean, it's really attractive from a dividend perspective, but what's even a better dividend?
What's that?
Owning the actual property or properties in your portfolio and actually getting the rental income. And then you get incredible leverage when you actually own the asset. You can take out smart, inexpensive debt. So I won't keep you too long. I could go on and on, but rest assured that I own a lot of physical assets, and I try to keep as little money in REITs in the stock market as possible.
Yeah, that's good. That's good. All right, Gregg, how can people find you? How can people connect with you? Talk about the Facebook page, the show, all of that. Where can people get you?
The show is something that I love to do. It's been great. We've had Al, as we mentioned, on as a guest, and Pablo is our host, and he and I just have a ball. So I would love for you all to join us. We do it every Tuesday and Thursday. We bring some of the highest level guests that you'll find either here locally, or really just movers and shakers in the real estate industry. And that's usually our Tuesday show. And on Thursday, we do a live turnkey property of the week. This is one that I recommend for all of our investors, and I break it down for everybody. So that's on the Thursday show. And to go there, it's free, of course. You can register at jwbshow.com. So that would be awesome. And then also, I'm really active in the Facebook group, as we've mentioned a little bit here and there. So I would love for you to join us. We have over 1,800 members there, and it's really an engaged group. You can go there. You can join the Facebook group at jwbfacebookgroup.com. jwbfacebookgroup.com. And other than that, I'm always happy to be a resource for you and for your listeners, Al. So if I can help in any other way, please let me know. I really appreciate the time we had today.
Absolutely, Gregg. And anybody watching, again, watch the Not Your Average Investor show. Gregg and Pablo bring on some of the most unique people in the real estate industry, and also thinking outside the box, right, in terms of building wealth for your business. And they have an amazing Facebook page. So look, join, contact Gregg, reach out to Gregg, reach out to JWB. They're a great resource. Gregg, absolutely loved having you on. I think we could have kept going on and on about every little thing that was there.
Where did the hour go, brother?
Everything was great on here. And I thanks again so much for being on here. You're going to make such a difference with the content you provided for people that are just starting out, have no idea where they're going, are lost, or are really want to start scaling their rental property business. I think it's just amazing.
Well, my pleasure, buddy. Thanks for the platform. It's been awesome getting to work with you, and just happy to be here with you, brother.
Cool. We'll keep it going. All right, everybody. If you want more content like this, check out the Al Nicoletti YouTube channel. I got videos out there. Watch the videos, comment, subscribe to the channel, share your experiences, share comments. Make sure that you don't just find deals, but you take action so deals find you. I'll see you next time.